Money has been a fundamental aspect of human society for thousands of years, and its evolution has been shaped by a variety of factors, including technological advancements, economic systems, and cultural practices. By understanding the history of currency, we can gain a deeper appreciation for the role that money plays in our lives today and the ways in which it may continue to evolve in the future. So join us as we delve into the fascinating world of money and explore its rich and complex history. Before we dive in, make sure to hit that subscribe button and ring the notification bell so you never miss out on our insightful content. Let's get started. Before the invention of money, humans used a barter system to trade goods and services. This involved exchanging one item for another, such as trading a chicken for a basket of fruit. Imagine trying to trade your sheep for a bag of grain. It wasn't the most efficient system. Bartering had its challenges, leading to the need for a more standardized medium of exchange. It was not always easy to find someone who had what you needed and wanted what you had. As a result, humans started using other forms of currency, such as shells, beads, and precious metals. One of the earliest forms of currency was the cowrie shell, which was used as currency in many parts of the world, including Africa, Asia, and the Pacific Islands. Cowrie shells were small, easy to carry, and had a unique shape that made them difficult to counterfeit. In some cultures, cowrie shells were also used as a symbol of wealth and status. Another early form of currency was beads, which were used by many indigenous cultures in America and Africa. They were often made from materials such as glass, bone, and stone, and were highly valued for their beauty and rarity. Precious metals such as gold and silver were also used as a form of currency. They were valuable because they were rare, durable, and could easily be divided into smaller units. Gold and silver coins were used by many ancient civilizations, including the Greeks, Romans, and Persians. Overall, early forms of currency were often based on items that had intrinsic value, such as shells, beads, and precious metals. These items were often used as a medium of exchange, a store of value, and a unit of account, and they paved the way for the development of modern currency systems. Fast forward to ancient civilizations, and we witness the birth of coinage. The Lydians are credited with creating the first standardized coins around 600 BCE. These small metal discs revolutionized trade, providing a universally accepted unit of value. The Greeks, Romans, and other cultures soon embraced this innovation, paving the way for the next chapter in the evolution of money. As trade and commerce continued to expand, and as societies expanded, carrying large amounts of metal coins became impractical. The limitations of using precious metals as currency became increasingly apparent. Precious metals were heavy, difficult to transport, and could be easily stolen. This led to the invention of paper money, which allowed for larger transactions and was much easier to carry than precious metals. The first paper money was invented in China during the Tang Dynasty, 618–907 AD. The Chinese government issued paper money that was backed by the value of silk, which was a valuable commodity at the time. The use of paper money spread to other parts of the world, including Europe and the Middle East. In Europe, paper money was first used by the Swedish government in the 1660s. The Swedish government issued paper money that was backed by copper reserves. Other European countries soon followed Sweden's lead and started issuing their own paper money. The United States also started issuing paper money in the 18th century. The first paper money was issued by the Massachusetts Bay Colony in 1690 to pay for military expenses during the war with France. The use of paper money became more widespread in the United States during the Civil War, when the federal government issued paper money to finance the war effort. The invention of paper money revolutionized the world of finance and made it easier for people to carry out transactions and conduct business, paving the way for the modern banking system we have today. The 19th century saw the rise of the gold standard, where currencies were backed by a specific amount of gold. This system brought stability, but had its drawbacks. The limitations on money supply constrained economic growth during times of crisis. The Great Depression of the 1930s highlighted the flaws, leading to the eventual abandonment of the gold standard. As modern banking continued to evolve, it became more sophisticated and complex. Banks began to offer a wider range of services, including checking and savings accounts, loans, and credit cards. They also played a crucial role in the creation of credit and the management of the money supply. With the gold standard gone, fiat currency emerged. Governments could now print money without the need for precious metal backing. While this allowed for greater flexibility, it also raised concerns about inflation and the erosion of purchasing power. The global economy entered a new era, marked by fluctuations in currency values and the need for monetary policy. In the 20th century, modern banking underwent significant changes with the introduction of electronic banking. This allowed customers to access their accounts and conduct transactions online, making banking more convenient and accessible than ever before. The convenience of digital transactions transformed the way we interact with money. Today, modern banking is an essential part of the global economy, with banks operating in every corner of the world. They play a vital role in facilitating trade and commerce, providing loans and credit to individuals and businesses, and managing the money supply. However, modern banking also faces significant challenges, including increased regulation, cybersecurity threats, and competition from new financial technologies such as digital currencies. As a result, banks must continue to innovate and adapt to meet the changing needs of their customers and the broader economy. Now let's talk about the game changer of the 21st century: cryptocurrencies. Bitcoin, introduced in 2009, marked the beginning of a decentralized era. Blockchain technology offers transparency and security. While the crypto space has faced skepticism and regulatory challenges, it undeniably represents a shift in the traditional financial paradigm. Modern banking has come a long way since the days of the Medici Bank and the Bank of North America. It has played a crucial role in the growth and development of the global economy, and it will continue to do so in the years to come. In addition to Bitcoin, there are now thousands of other digital currencies, known as cryptocurrencies, that have emerged in recent years. These cryptocurrencies operate on similar principles to Bitcoin, using blockchain technology to enable secure, decentralized transactions without the need for a central authority. While some cryptocurrencies have gained widespread adoption, others have struggled to gain traction in the market. Despite their potential benefits, digital currencies also face significant challenges. One of the biggest challenges is their volatility, as their value can fluctuate rapidly and unpredictably. This makes them a risky investment for many people and has led to concerns about their long-term viability. Another challenge facing digital currencies is their association with illegal activities such as money laundering and drug trafficking. While digital currencies offer a high degree of privacy and anonymity, this has also made them attractive to criminals who want to conduct illicit transactions without being detected. Despite these challenges, the rise of digital currencies represents a significant development in the evolution of money. So, what does the future hold for the world of finance? Will we see the widespread adoption of cryptocurrencies, a move towards a cashless society, or the emergence of entirely new forms of money? As technology continues to advance, it is likely that we will see new forms of currency emerge. Whether these new forms of currency will be based on blockchain technology or some other innovation remains to be seen. But one thing is certain: the world of finance will continue to evolve and adapt to meet the changing needs of society. And there you have it, a journey through the history of money, from bartering to the digital age and beyond. The evolution of money reflects the ingenuity and adaptability of human societies. As we look to the future, the intersection of economics, history, and technology will continue to mold the way we exchange value. If you enjoyed this exploration, don't forget to give it a thumbs up, share it with your friends, and leave your thoughts in the comments below. Thanks for joining us on this enlightening journey through the evolution of money.